In today's video, I'm going to teach you how to understand Vive Financial interest rates. By the end, you'll know where to find your key numbers, what they mean, and how to use them to minimize interest and avoid surprises. Start by locating your APR, or annual percentage rate. You'll see it on your monthly statement, in your online account, or in your original financing agreement. The APR is the yearly cost of borrowing expressed as a percentage, and it reflects the interest you'll pay over a year, not per month. For example, a 24% APR doesn't mean 24% each month. It's spread across the year. Keep in mind you may have different APRs for purchases, promotions, or other transaction types, so check each line closely. Next, understand the type of APR you have. A variable APR can change with market rates, while a fixed APR tends to stay the same unless your agreement says otherwise. Some accounts offer a promotional APR that's lower for a limited time, often for a specific purchase or period. Make note of when that promotional window ends and what rate it will revert to. Also, look for any penalty APR that could apply if you pay late. This can be significantly higher and may last for months, so it pays to stay current. Look at the grace period. This is the window between the end of your billing cycle and your due date when you can pay your statement balance in full and avoid interest on new purchases. If you carry a balance from the previous cycle, many accounts suspend the grace period until you've paid in full again. The practical takeaway is simple. Paying the full statement balance by the due date usually helps you sidestep purchase interest. Understand daily compounding. Most interest is calculated on your average daily balance. The daily rate is your APR divided by 365. For example, a 24% APR works out to about 0.0658% per day. That means your balance is recalculated daily, and interest can grow on prior day's interest. Making payments earlier in the cycle or more than once per month can lower the average daily balance and reduce how much interest accumulates. Finally, review fees and terms in your agreement. Look for late fees, return payment fees, any minimum interest charge, and the rules around promotional offers, including what triggers a rate change. Check whether certain transactions have different rates or no grace period. If anything is unclear, contact customer support and ask for a plain language explanation. Keep these points handy, pay on time, and review your statements regularly. Understanding how your APR, grace period, and compounding work is the best way to keep borrowing costs under control.